Hi there, you're watching Buy Now, Sell Now on ET Now with me, Shriyanti Singh and Srishti Sharma. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, let's take a look at the markets then. And Srishti, quite a lackluster day of trade, at least for the Nifty.
Well, yes, Shreyansi, we can say so. But if we talk about a stock-specific action, yes, indeed, a lot of is happening on that particular front. Firstly, onto the new listing on the exchanges. If we talk about NTPC Green Energy, after quite a muted listing, we have seen gains building on to that particular index, and that's where we should wish to start the show from. But other than that, if we talk about some of the movers and shakers in trade today, then it's the Adani group of counters that are doing pretty well on the back of the clarification that the company has come out with. Like I was just mentioning, NTPC Green Energy IPO on the first day itself has done pretty well. It's NTPC as well, which is on building onto the gains of close to 2% right now. All these PSU counters from the likes of BEL, Coal India are once again having a good day. But from the auto pack, have a look at Ola Electric as well, because the company did come out with the new launches. And today, Citi has come out with a very positive note on this one, initiated the coverage with the target price of 90 rupees, and look at the move, it's almost 12% gain coming in on this index as well. But if you look at the breadth of the market, that is in the favors of the advances. That's the NSE and BSE advance decline ratio for you. But all in all, not much happening on the index level. But the good part is that for now, India VIX is down about 2.5%. So that's not a worry for the bulls out there, but let's see that for now we are close to that 24,200 mark. Whether we build on to the gains or not, that will be the key to watch out for. Shansi.
Well, absolutely. That is definitely something that we're looking at. But tell you what, let's kickstart taking all of your stock-related queries. And on the show today, we have Kunal Bothra as well as Shahina Mukadam, who's an independent analyst, also joining us. Thank you so much for taking time out and good morning. Let's kickstart taking the first query that we have then. And Shahina, I'm going to come to you with this one because we do have an investor who's not mentioned their name, but they really want to know about Vari Energy, and they want to know about what really you should be making of that particular counter at this point. Is that something that you look at?
Well, it's a new listing and it had a phenomenal listing. And they have actually announced just, I think, yesterday the plans, they've crystallized the plans that they were talking about of investing in the US in putting up capacity in renewable space. And I think in terms of valuation, while it is expensive, things are working out in favor of the company because one is that you are likely to see some tariffs on China, which makes, Vari energy a bit more attractive in terms of growth going forward. So I would say if you have got if you've got shares in the IPO, definitely continue to hold. And if not, then I think you should wait. Let us have a look at what tariffs come in, by the new Trump government, and then look to add. But you can definitely hold as of now.
All right, then that's the day coming in on Vari. But moving on to the next query, and this one is this query that I have is coming in from Smita Vikram, and if you can guide her, Kunal, first of all, a very good morning. And the query related to Smita Vikram is on BSE. She wants a suggestion: is this a good time to enter BSE at current market price, or should she wait out for some more correction, or any entry price or entry point that you can help her with?
Good morning. So, I think the last 3 days we've seen a correction of almost 500, 550 odd points for BSE from 4900 mark towards 4380, 4400 where it's trading right now. So, which means that a decent correction over the very short term has played out. The stock today seems to be recovering from the intraday lows. So, I'm assuming if it stays put above the 4400 mark, say by the end of the day, we could probably expect that the stock may come back into a mean reversion territory as well as a good support point at current level. So, if you're a short to medium term investor and if you are looking at buying the stock in phases, I believe the first phase of mean reversion seems to have completed. You can start buying at current levels. In case if the structure corrects or the stock corrects further and the structure gets back into a more corrective phase, then maybe buying on dips, further corrections, say of another 400 odd points could be a better strategy.
Well, absolutely. So that's a take coming in as far as BSE is concerned. I'm going to come to you, Shahina, because the next one that we have is coming in from Rebecca from Calcutta. Now, she wants to know about Biocon. Her buy price is 366 rupees. She's not mentioned the quantity that she's holding on to, but she wants to know if she should book out profits. So what do you make of this particular counter?
To hold. In terms of approvals, Biocon is well ahead for generic biosimilars. So I think she should continue to hold. They are getting some clearances also for the plants where they had certain issues with FDA. Valuations also not expensive. It's just about 2 times price to book. So she should hold.
All right. The next query that I have, Kunal, is coming in from Lakshmi from Vijayawada, holding 300 shares of Raymond from a price of 600 rupees, and she also got some shares of Raymond Life as well. But what's your take on Raymond, Kunal? Is this a good time to book out some profits or continue to hold on?
I think continue to hold on. You've bought at a reasonable price on the downside for the stock. I think it's done pretty well for itself. And my sense is that the Raymond Lifestyle shares which you've got is adjusted towards the the price for Raymond itself. So I think I would probably look at this as a longer term play. Even if after this recent correction, I think if I'm not wrong, 1400 was the low which was tested by Raymond as a stock price in the very recent time frame. The stock has moved towards 1600 to 1700 mark. I would believe that the long term structure is very attractive. The stock seems to have completed a major phase of price correction. I think at current levels you can continue to hold on.
Alright, then the next one is coming in from Nikhil Sharma from Mumbai, Shahina, and he's writing to us about the 15 shares that he's holding on to of Reliance Industries. Buy price is 1,287. What do you make of this particular counter?
Again, I would suggest that he continues to hold. We are hearing of a geo listing next year. I think that will be a big positive. In addition to that, most of the other segments are firing up. I think he can continue to hold.
That's a hold coming in on Reliance right now. But the next query is coming in on Nestle. And Kunal, if you can help Sheikh Khan from Punjab, who is holding Nestle India 40 shares. Buy price is 2,500 rupees. He wants an advice for the long term.
See, long term wise, of course, Nestle is a good stock to hold on to. But my only concern is the trend which has happened for Nestle and the FMCG pack in the last 1.5 to 2 months. This indicates that these stocks generally get back into a sharper process of correction and then more of a time wise consolidation. So my expectation is that over the next 3 months or so, the stock should remain a lot more sideways. But in a sideways range, I think when you're looking at buying these kind of stocks, use any kind of a correction, and especially I think if a stock goes into a retest of the previous low, say for example 2150 approximately was the recent low for Nestle. If the stock comes closer to 2100, 2150 range, that could be a range where you can look to add or accumulate further.
Alright, so that's a take as far as Nestle is concerned. Kunal, tell you what, I'm going to come right back to you because the next query is also coming in for you only, and we have an investor called Tina who's writing to us about Rail Vikas Nigam. Wants to know if a fresh buy can be made at this point. What do you make of this counter?
See, I think price-wise consolidation or correction seems to have happened for many of the railway stocks, including RVNL. The stock, I think, from the recent highs of 600 or 650 approximately, had corrected towards 350, 400 levels. So, which means that a major part of the correction, 40-50%, seems to be out of the way. There could be a possibility that these stocks may just about stagnate for a few months, but it all depends on the market mood. So, if the market comes back into a risk-on mode pretty quickly, then you might probably expect that the time-wise consolidation could be a lot more shortened for these stocks, and you might see these stocks coming back into a breakout mode. So it depends on the overall market theme, but as of now, price wise, the risk reward wise, the trade looks attractive from a medium to long term play. But the only catch, as I said, is that in case if the market gets into a zone of consolidation, the stock may get back into a time wise correction for a slight bit more elongated time.
All right, then that's the take coming in on Rail Vikas Nigam. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries then. And the next query that I have is coming in once again for you, Kunal. This query, the viewer didn't actually share his name, but he wants your advice on L&T. He has bought 200 shares. His buy price is 3,465 rupees. He's been holding this for the past 5 to 6 months. What to do with this particular counter? And also, Kunal, between Ultratech Cement, Granules and Medanta, any stock you like for a fresh positional bet?
So L&T, I'll start off with that. It's looking attractive. In fact, it's emerged to be one of the stronger names from the larger cap, cap good names in the last few weeks of the market sell-off. First, and then the market recovery. So I believe at the levels of 3700 approximately where it's trading right now, you can continue to hold on. My immediate targets for L&T I think is closer to 3800, 3850 levels. So I would suggest to hold on to the stock, even if you're a short-term investor or short-term trader. But on the other hand, I think the likes of Medanta, Granules, etc. From these and UltraTech Cement, the chart which is looking a bit more attractive. So it depends. If you're looking at slight bit of low risk and low beta stocks, then UltraTech Cement I think should fit the bill pretty well. The stock is looking attractive. That's a chart which has been a lot more stable and a lot more consistent with the price patterns. So UltraTech Cement is what you can look to buy. But if you're looking at this as a potential breakout and slight high beta, then I would probably suggest even Granules is looking very attractive. The stock is coming closer to the previous swing high breakout levels around the 580 approximately mark. So that's another stock which you can look out for.
Alright, so you can look out for Granules India as well as UltraTech Cement. That is a good buy according to Kunal. But tell you what, I'm going to come back to you, Shahina, because we do have RVNL that we've covered, and we have an investor who's not mentioned their name actually, wants to know if they should be switching funds from RVNL to BEL. What do you make of those two counters?
Well, both are interesting and both are expensive at current levels. BL is looking like it's in an upward momentum. In terms of valuations, it is expensive, but they are continuing to get orders. And over a medium to longer term, I think, after a bit of a rally, maybe 320 type of levels, then you could look to book some profits. But as of now, BL is looking better than RVNL. But RVNL by itself is also, it has huge orders. So that also is a good long-term play. It is expensive. So you could look to add at any dips that you get. As of now, I would prefer a buy on BEL.
All right, that's the take coming in on both of these names. But Shahina, the next query that I have is coming in from Swati, and she wants help with two counters. One of them is AU Small Finance Bank, where she's holding 100 shares, but is at a loss of 20% in this particular investment. And the other counter is MCX, and she's highlighting that she's at a very good profit in this one since her buy price is 2,500 rupees. She is a long-term investor, Shahina, but what should be her strategy with respect to these names?
A small finance, I would suggest she switches from there. She could look to invest in something like a federal bank if she's looking for a smaller, a smaller size bank. Of course, the larger private sector banks look good. MCX, I would say that, yeah, we are seeing some bit of consolidation that is going on. Short term, she may see some bit of weakness, but since she's gotten at a good price, I would suggest she continues to hold for the medium to longer term.
Alright, and so that's a take coming in as far as MCX is concerned. Tell you what, Kunal, I'm going to come back right to you because we have Prasad who's writing to us about Tata Motors as well as Tata Technologies. He wants to know which of the two is better.
So I think, of course, both of them are better. Tata Tech has a very limited price history, so wouldn't be able to really look at this as a long-term play. But I think at current levels of 950 approximately, looks like that the stock seems to be into an oversold territory. Same is the case with Tata Motors. But the only concern with Tata Motors is that the sell-off has been very recent. The stock has corrected from 1150 odd mark towards the sub 800 levels where it's trading right now. So which means that there could be a potential time-wise consolidation which may happen for Tata Motors. And my sense is that it's always better to try and buy the stocks or keep adding whenever the stock retests the previous lows and keeps making minor swing lows, because a major part of the correction seems to be over in terms of price. But a time-wise correction is what you should try and take opportunity of. So both of them are attractive. Tata Motors specifically, if the stock keeps retesting the previous lows, I think you can keep on accumulating the stock from long-term play.
All right, that's the take coming in on Tata Motors. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back after this quick break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And Kunal, I'm going to come to you with the next one because we do have Mahalakshmi writing to us from Hyderabad. Wants to know about Adani Ports at this point. Now, she's a long-term investor and she wants to know what your take is on this particular counter.
See, of course, the stock has been into a lot of news flow. I generally believe that it's better to avoid these kind of stocks and buy once this kind of a cloud of uncertainty. I think it goes out of the way for these names, because even if these are formidable stocks, we've seen many a times that when these stocks get into thick of a lot of negative news flow, they could remain into huge underperforming zones for quite quite a bit of time. So that's the only concern for the Adani group of names, or else you can keep a price-wise caveat that if these stocks break past about their say 1 month swing highs, that's where you can look to buy. That level for Adani Ports could be I think around 1350 to 1400 mark. So it's better to buy these stocks when they confirm a breakout rather than buying them on dips and expecting that those dips could be stronger bottoms, because such kind of negative news flows for the stock price could keep the stock into a lower price trend for not just days but for weeks and for months as well.
All right, that's the take coming in on Adani Ports. Moving on to the next query then, and the next query that I have is coming in on HAL as well as HCL Tech. And Shahina, if you can help Jay Krishnan, whether to go ahead with any of these stocks right now, HAL or HCL Tech, for a medium-term investment. Would you suggest to buy any of these names at current market price, or wait out for some more dips, or any entry point as well, if you can help him with?
Well, both stocks look good. They both look good for both the medium as well as the longer term. If you look at HCL Tech, valuations are pretty attractive. So to that extent, and IT is doing well. And HAL, the order book position is likely to really pick up steam. It's already got a huge order book position. It's slightly expensive, but if you're a longer term investor, you can remain invested in both these stocks.
So can remain invested when it comes to HCL Tech as well as HAL. That's the view coming in from Shahina as well. Kunal, tell you what, I'm going to come to you with a couple of these banking counters that make it to Bhaskaran's radar, and he's talking to us about Canara Bank as well as Indian Bank. He wants to know if any of these are a good bet in terms of a fresh investment then. Kunal?
Okay, so yeah, I think Canara Bank as well as South Indian Bank. So Canara Bank is a much more better chart as of now. I've looked at the charts for PNB, I've looked at the charts for Union Bank, Bank of India. So if you're talking of PSU basket, as an overall play, then I believe that Canara Bank, PNB could be good investments. But there is a slight degree of outperformance coming out from SBI and Bank of Baroda on a relative basis. When we look at this as a price comparison from their June July highs with respect to the recent lows in the month of November, which these stocks formed. So there is a slight degree of higher strength, better strength, as well as higher resilience coming out for these names, Bank of Baroda as well as SBI. So you may probably prefer these larger cap private sector bank PSU banking names. But in case if you already have them as part of your portfolio, then I would believe that you can go back into the likes of Union Bank. You can also look at Canara Bank at current levels.
All right, moving on to the next query, and Shahina, this next query is coming in from Venkatesh from Indonesia, and sticking with the banking space, he wants an advice with Bank of Maharashtra. He's already holding 2,500 shares, buy price is 60 rupees. Wants to know, can he add more at these levels for the next 2 years maybe?
Well, actually, I would suggest that he doesn't add Bank of Maharashtra, because there it is likely that you may see a fresh follow-on issue from the government side to further create funds for the bank. So to that extent, I would avoid adding Bank of Maharashtra. Of course, it's done well. We've seen a good rally, so you can continue to hold. But at the same time, I think if I'm adding on stocks, I would prefer adding some other PSU stocks. Kunal just listed out 2 or 3 of them. I would also go with the 3 stocks that he's listed out. I think Canara Bank looks good even at current levels. You have PNB, you have SBI. So it's better to add some other PSU banks to your portfolio.
All right, so that's the take coming in as far as those counters are concerned. Tell you what, Kunal, we also have Gautam writing to us from Mumbai. Now, he wants to bet on a couple of those food delivery aggregators. He's talking about Swiggy and Zomato. In fact, he's asking if he should be splitting funds 50-50 for the next 12 to 18 months. What's your take here?
So Swiggy is difficult to comment because of the recent history for the stock, but Zomato, I think, of course, is the most stronger one. Good price history. The stock has done exceptionally well from the lows of 50 odd, a couple of years back, towards the point when the stock neared, I think, 300 levels. It's come back towards a corrective phase. 250, I think, if I'm not wrong, was the recent low for Zomato. But my sense is that you should look to buy these stocks in phases or in tranches. So I think at current levels, for example, 287 is a good price where you can look to start buying Zomato, because there is a lot of positive news flow surrounding the stock price. There could be a point where the stock is riding on high momentum, but once the news flow abates, the momentum fades down and these stocks come back to their natural mean reversion points. that's where you should try and take advantage to try and build up higher quantity. So you can start nibbling at current levels, but as I said that wait for a phase maybe over the next few weeks, over the next few months. If you get an opportunity to buy these stocks maybe at a 5% to 10% discount from current levels, that could be a point where you may look to buy a bigger chunk.
All right, that's the take coming in on Zomato. But the next query that I have is coming in on Torrent Power. And Shahina, if you can help Sudha on her investment with Torrent Power, because she's holding 30 shares, buy price is at around 2,000 rupees. What to do with this one? And the other stock that she has is 100 shares of Heritage Foods. Buy price here is 573 rupees. She's sitting at a loss in both of these names, Shahina. But do you believe that she should stick with these counters? Can they give her some reward, and any time frame that you can help her with?
Well, Heritage Foods, I personally also hold, and yeah, the stock has disappointed, but I believe that valuations are very attractive, and the ice cream business is likely to pick up. In terms of numbers, they are doing pretty well. If you actually look at the growth in terms of profitability, so I would continue to hold Heritage Foods. In terms of Torrent Power, I believe you are likely to see some weakness over the medium term. So if you'd like to exit one of the two, I would exit Torrent Power.
Would exit Torrent Power. That's the take coming in from Shahina as well. Tell you what, Kunal, I'm going to come right back to you because we do have an investor who wants specifically your view, is writing to us about IRFC, 7,000 shares, bought at a price of 48 rupees is what he is holding on to. And for Angel One as well, he's holding on to 650 shares at a buy price of 2,700 rupees. What do you make of these two counters?
Hold on to both of these names. My assumption, of course, is that you are a long-term investor, and IRFC I think has done rewarded exceptionally well from 20-25 odd rupees. The stock went up to 200 plus marks. So after a 10x rally, you're bound to get back into a zone where these stocks consolidate. Don't fret if the consolidation lasts for another 3 months, 6 months for these stocks before you see such kind of a high-paced, high-momentum rally for these names. But since you're a long-term investor, you've purchased at a lower price, I would believe that you should hold on to both of these names.
All right, that's a hold coming in on both of these names, but just observing that a lot of our viewers are skipping writing their names. So there's a small request that if you can write your name so that we can help you better in terms of getting the right advice for you. Otherwise, it's just happened to miss the cue. But Kunal, yet again coming back to you, this one is also from a viewer. He didn't share his name, but he wants an advice with UPL because he's holding futures of UPL, November futures, at a price of 580 rupees. Should he book loss in this one, or would you advise to roll over to the next series?
See, I would advise to roll over to the next series. The recent rally for UPL was, of course, on the back of a lot of positive news flow for the stock price. I think there's some special situation adjustment for UPL in the last 2 days, and that's why you've seen the stock suddenly underperforming from 560 levels to 540 thereabouts where it's trading right now. But I believe eventually these minor aberrations, they generally get corrected. So my expectation is that maybe in the first week of December, if the market is also a lot more stable and maybe at a slightly better levels than what we are right now, then I think UPL can make a comeback for itself. So I think in that anticipation, I would suggest a hold.
Alright, so that's a whole recommendation coming in on UPL. Shahina, I'll come back to you because we do have an investor called Vijay from Chennai who's writing to us about Dr. Reddy's Labs. What do you make of this particular counter? Because he wants to know if he can invest fresh into this counter.
Yeah, Dr. Reddy's, if you're looking at a longer term, yeah, you can. The only issue is now, I'm a little bit concerned about the overall US market. Of course, US market forms a major component for Dr. Reddy's in terms of turnover as well as profitability. And so now we'll have to relook if there are any changes in tariffs and how it will affect the pharma sector. But overall, I think pharma sector should do better in the US given the, the generics push that is likely to happen going forward and the stabilization in prices. Dr. Reddy's, in terms of valuation, is attractively valued compared to the rest of the large pharma. So you can continue to hold Dr. Reddy's and invest at any dips for the longer term.
Right, that's the take coming in on the pharma names. But with this, viewers, would like to thank Shahina as well as Kunal for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more.
If you like this video, then like, share and subscribe to ET Now.